Hey traders, top-down analysis is one of the most efficient ways to analyze and trade different financial markets. In this video, I'm going to show you the time frames you need to watch and the main step to go through to execute a top-down trading strategy properly. Being a top-down trader, your task is to assess the global market respectively and identify the zones and the areas from where it will be relatively safe for you to trade it, following the trend or catching the reversals. Now, firstly, we'll be looking at our weekly time frame. From the weekly time frame, you can be able to spot out the overall trend of the market in our weekly time frame. This will show you the data analysis of almost a year, 2 years, and 3 years. You can see it here. Back from 2020 down to 2025, we show you our weekly data analysis. But luckily for us, we are not needing this particular data analysis, because if you are able to mark out your order block before price will be able to go down to that order block, then it will take months, years if not, before the price can be able to move from this particular place down to this particular place. But why our order block is important is that we can be able to use the order block to mark out our fair value gap, supply and resistance area, or our buy side liquidity or sell side liquidity. Now, looking into this particular market structure, you can see that this is Euro AUD. Our fair value gap is far away from our current structure. This is far away from our current structure, but from our current structure, you can see we still have this weekly buy side liquidity. The price haven't mitigated yet, but the price have taken out the sell side liquidity already. You see, price swept the sell side liquidity already, but haven't already taken the buy side liquidity. Nevertheless, let's move down to our 15-minute time frame, our 4-hour time frame. You see, every time frame tells a different story. Now, from our weekly time frame, you can see that we are bullish because we are pushing to the upside, not because there's any break of structure to the upside, but you can see a lot of bullish candlestick being printed in this particular scenario. Now, I want you to focus more on the daily, 4-hour and 1-hour time frame if you are a swing trader. But if you're a day trader, you can easily focus on the 4-hour time frame, 1 hour and 15 minutes, or basically the 5 minutes time frame. Now, let's push down to our daily time frame to have any clue in this particular market. Now, when looking at our daily time frame, you can see price already tapped into this fair value gap. I think last week, price are taking out this fair value gap already last week, giving us a push to the upside after dancing around this fair value gap. So, and again, let's check if we can read the current market structure of this particular market. Reading the current market structure, we'll start from here up to here. This is what we're starting for, and this is our daily time frame. Okay, let's watch, let's see what we have here. This is our change of character to the downside gotten from our daily time frame. Price has already mitigated the order block already, so not much information, because the last time we checked, price already take out the liquidity and the fair value gap residing below here. So let's push more down to our 4-hour time frame to be able to have a clear clue of the market, to know what we are doing. Neither it's buying or neither it's selling. Let's push down more and more. So now, okay, in our 4-hour time frame, let's do analysis. From our 4-hour time frame, I think we are a little bit bearish since the month of July and this new month of August. we are bearish. We are bearish, and as a day trader, we need to trade every fucking day. So let's analyze the market quickly from the 4-hour time frame. Our change of character to the downside. This change of character was gotten from the daily time frame. You understand that? And after seeing that change of character, you can see a minor another change of character again to the upside. Break of structure. Change of character. This is a liquidity sweep because, okay, yeah, not a liquidity sweep, a break of structure to the downside before seeing our change of character. Now fast forwarding down to the current marketplace. This is a new change of character. And this is our new change of character again, but this is the current change of character of the market. After that, you can see that we have been ranging from this particular area. We have been ranging from this particular area. So therefore, we need to be expecting price to push down to this other block over here, because of, you can also see our other block there. You can see our fair value gap residing there. Price hasn't taken our fair value gap yet because of tapping into our other block. This other block is being drafted from the 4-hour time frame. So beware of what you do. If you're a swing trader, you can just wait. You can wait for price to take us down here and look for your confirmation from the 15 minutes time frame before you're able to buy. But as a day trader, let's push down. Let's mitigate this particular origin down to the 15-minute time frame to know what we have there. Now in our 2-hour time frame, let's go to 2-hour time frame. We have another different structure. This is it here. Change of character, because this serves as our break of structure to the upside. So this is our change of character again. So many changes of this is what we call inner structure. This is the inner structure of the market, inner break of structure. You understand? And this is what we call the inner or external. This is what we call the external change of character. If you want to really mark this particular aspect, we'll start from year to year. You understand? This will be the inner or internal change of character, but here is the external change of character. So now this is our break of structure, because price has already mitigated this particular origin that caused this change of character, which is from this particular area here down to that particular area. You can see it here, price has already mitigated that particular structure or the particular other block that caused this particular change of character. So now let's keep mitigating it down for us to have a better clue of the market. So now judging from the 2-hour time frame, this is our latest break of structure. No current trade signal for now, because let's move down to our 1-hour time frame to check out something. In our 1-hour time frame, you can see a different scenario. Let's mark this out as again our change of character. This is our 1-hour change of character, and after seeing this particular aspect for the day trader, you mark this out. This is our other block. And this other block has a liquidity residing with it. a fair value gap, not liquidity. So, but this is our liquidity. All this will serve, can serve as our liquidity. So after seeing this, let's push down to our 30 minutes time frame. Our 30 minutes time frame, what do we have here? What do we have here? The same structure formation. Yes, guys, the same structure formation. So nothing different. 15 minutes time frame. The same formation from our 15 minutes time frame, but judging from our 15 minutes time frame, I think we are kinda pushing to this downside, pushing to this particular area here. So if you want to sell, I think you can sell if there's a break. If you can see a break from here, then we'll be selling from this area. We'll be selling from here. If price can break that particular side, then we'll be selling from there. Our stop loss should be below here if price didn't close above this particular place, above this particular amount over here. If price didn't close there, then that will be our stop loss, and our TP should be, this is a counter trade, you understand, this is a counter trade. Our TP should be down here. Refining this, let's refine this thing down. Now this is our 15 minutes order block here. So our TP should be in that 15 minutes order block. And this is all we're looking at for. If price close below this particular area, then we'll be looking at to sell. You can see how I do my top-down analysis from the weekly to the daily to the 4-hour, 2-hour, 1 hour, 30 minutes, and 50 minutes time frame. That's how I do my top-down analysis every day and send out signal to my students. You know that, you understand that, guys. So I think that's all we got for now. See you guys in the next video.